everyone. In this video, I'm going to be talking about some approaches to trading that could help you whether you're doing binary options or Forex. So the key concept here is the big round numbers and also the moving average line, which is very, very crucial. So this moving average line here is a 200 MA, and the 200 MA is a very constant means of assessment, and throughout history, price has always paid a very huge attention to this. Like, it tends to stop or bounce or reverse at these levels, 200 moving average. And also, what I want to point out is that the key levels of like 00 and 550. So right now, you can see that gold has actually recently went down to 1800. Actually did a little bit below that, but didn't close below it. Dipped beneath but then close below, and it just stopped at around this region, and right now is coming up to the 1850. So it might stop, it might reject, and perhaps might go for that again. So at this point of time, will it go to 1800 again? Well, possibly. Or it could probably stay put here and bust through to the other side to 1900. So if it goes through here, then the next one. What I have here is an image of a ladder. If you're going to be climbing up a ladder or coming down a ladder, where do you put your hand? Where do you put your foot? It's obvious, on the next rung, right? You can't put it in between, because if you put your foot somewhere in between here, what's going to happen is just it goes down to the next step. Same thing for price. If it goes above here, the next step is there. Notice that previously there was also a little bit of a price slowdown and a little bit of a support resistance at those levels as well. We're looking at the 1900s, see? So there'll be a little bit of a support beneath and above, because at those points there will be candles that stop above it or below it. Now, if we go down to a different pair, let's say we look at the Euro USD. This is a Euro USD 1 hour chart, and I want to show you some sense with the 50 and 100s theory as well. So look at this. At the 50, there's previous resistance in going higher, and when it broke through, it went all the way up to the next higher level as well. Went a little bit past it as well, okay? And then came back down, and again, what did it do? It touched that level, and it came back down again. When it came back down, where did it go to? A little bit below 50, and it came back up again around just a region slightly lower than the previous point. So 50 and 100 plays a lot of sense. But what if you guys are doing like binary options or very, very short-term Forex? Well, I don't even think you should be looking at a 1 minute chart if you're doing like Forex, because there's just so much spread to have to deal with. But if you're doing in binary options, because during a given period of time, sometimes the movement can be very little, especially in the Asian session. Right now is the Asian session, and what we can do here is do a little bit of experiment. Okay, what I want you to observe here is, what if we did like horizontal lines? Because we are in a much smaller time frame, I want you to notice like how there tends to be like, again, stopping, reverting, at all these different price levels. And why does that happen? The reason why this happens is because when you want to make an order, if there are like 6 decimal places, 5 decimal places, what do you think people are going to say? Like, let's say people are going to say, okay, I want to make a buy at 105.94. I want to make a buy at 105.93. I want to make I want to get out at 105.91, for instance. But no one's going to say, I want to get out at 105.91.256 or something like that. So this is the reason. And notice what's happening right now. Okay, when it goes through this, where do you think it's going to go to? It's eventually going to get to the next level. So by using this, if you go above one step, it's only going to get you to the next. Or if you go beneath one step, you're going to get to the next one above that. So that actually gives you some ideas that you can use this ladders theory to basically place your options. You see, it broke through this, it went up there. The only way it's going to come back down, or it's going to go to the next one. We can actually do a call option for a very short validity, and during that span of time, well, at the end of 1 minute, you find that it finishes over there. Once it breaks through this level, you can actually do a put because you know that it's going to be below this level. And if you find that you're quite close to the expiry, okay, and then you want to actually you're thinking that there could be a bounce, and you see that it has come a little bit, you can do a call because you know that that next line is going to be your level of support. So I hope you guys find this useful in your trading. This is the ladder theory, and it works all the way from the higher time frames, the 50 and 100s, and when you go down to a much smaller time frame like the 1 minute, you can even try it on low volatility sessions like the Asian session by putting lines like 1 pip value apart. Like this video and subscribe if you found this useful, and click on the links in the video description to get your demo trading account.